Good morning, traders, and welcome to Phoenix Blue's morning update. My name is Nishal Patel, and today is Friday, the 19th of August, 2017. I hope you're really well this morning. Starting off on key news for today, we've only got one key announcement that's due, and that's from the Canadian dollar on inflation. That should be coming out later on this afternoon. So that's the only thing we really need to be concerned about in terms of major key news for today's couple of sessions, European and American session. That'll be out at 1:30 British summertime for us. Having a quick look at the dollar index, we can see the dollar index, as we were saying yesterday, has pretty much finished up flat, so surrendering the gains that it has been making over the last few days and still closing up quite fairly flat around the 93.50 to 9300 mark. So right now floating at 93.35. Seeing some bounce of weakness on the US dollar, and that really is coming from political tensions and uncertainty, political uncertainty, and that sentiment really has been the primary driver on the market. So, what we're seeing is we're seeing good data coming out from the States in terms of its economy and the health of jobs numbers, as well as inflation data coming out from the States. But the greenback really suffering off political turmoil, especially coming out from the White House. And key personnel moving jobs, or I should say leaving or resigning, in some cases being sacked by President Trump, and uncertainty being surrounded by in that front, and that really is having a knock-on effect onto the USD. And as we'll see, we're seeing it have a knock-on effect to the rest of the markets. Having a look at the primary component of the dollar index, which is heavily weighted on the euro. The euro giving up some of the gains that we saw it make from the previous day. Right now floating at 1.17, just shy of 1.1750 to 1.1744. Again, kissing that 20-day moving average. Remember, it's an exponential moving average that you see on this chart right now, and hugging fairly tight to it. Haven't seen a break above or even coming close to that 1.19 mark since last week. So really in this tight area of consolidation, we can say it's building into this triangle, and if we just put some lines on here, we should be able to see them. We can see that we've got this formation folding in, and for those guys that are keen on understanding patterns, we can clearly put some trend lines in, and we can understand that it's forming into this symmetrical triangle. So we should be looking at a breakout, and for many of the traders, we're probably looking for a slightly deeper pullback prior to a movement long. We did have minutes out from the ECB earlier on the week. I think there was some caution and the minutes gave away a lot of details in terms of what the ECB personnel are thinking in terms of monetary policy and their thoughts on the strength of the euro. And there's been a fair degree of anxiety coming from the ECB camp. They're obviously seeing an obvious strength on the side of the euro, which is not deemed to be such a bad thing, but will hamper growth to a certain extent within the European community, especially as exports start to become more expensive and imports start to become cheaper, and that's an obvious effect on to GDP figures and future underlying GDP figures, and obviously will affect their monetary policy going forward for going into the final quarter of this year. Now, moving on to the Japanese yen. The Japanese yen, we've seen a fairly strong slide back below that 1.9 level, and we see it right now as we speak right now, just sitting at just below 109 right now, so 108.99. As we can see on our screen, just breaking that 382 fib level, and which has been key for many traders as we've been watching. And if I flick this over to a weekly chart, what we would have seen is we would have seen these two highs forming up, and this effect 382 is resting and looking to be resting just above that 200 weekly moving average, which many traders are regarding as a strong zone of support and resistance, effectively building into what looks to be a neckline for this almost double top formation here. So market's really going to be looking at that and potentially looking at a break below 108.70 in and around that region before any moves are decided. So please be very wary on that front. There are some obvious trades there, and no doubt if you'd like to get in touch with us, we'll be happy to discuss them with you. Moving on to Australian dollar, having a look at the Australian dollar on this daily time frame. Again, we had a slight pullback yesterday, coming up and literally caressing that 20-day moving average before lifting off over the overnight Asian session. Right now floating at 0.7917, so just above 7,900. Still looking fairly strong on that front, and then moving over to our local currency, looking at the sterling or cable, again still consolidating on this daily time frame below the cluster of moving averages of the 200 and the 100, and sitting below that key 2900 level. Now what's good to see is still it's above and closer, and I would say it's closer to that 2900 level than below that 2850 level, and many of our traders have taken certain positions and have been trading that zone. What we'll really be looking for is a break of that 2900 level before we start seeing it potentially lift off again. Now Canadian dollar, we're having a look at this daily time frame. We've kept this chart fairly clean just so you can see cyclicity for what it is. No doubt, guys, what you should be doing is having a look at the slightly larger time frame here and seeing how it's performing. And after its very strong bear run that we've seen, coming off a level and then coming back and showing those signs of bearish behavior again, off its high that we saw created earlier on in the week, and tested once again just above this 2760 area highlighted on the screen. We see the Canadian dollar taking full advantage of the weakness in the US dollar, and we can see right now floating at 1.2690s. So on its way. Let's not forget we do have inflation data out there. In terms of the inflation data that we may potentially see towards the end or towards the mid part of today, in the opening of the American session, the inflation data that we've seen previously has been slightly below expectation, and most certainly we're not expecting a change from the previous level of CPI data before, but we have seen data come out on previous, obviously CPI being a monthly data release, have been slightly below expectations on several of the previous data recordings. So might see a little fluctuation on the side of the loonie here, but we probably won't see too much action if we're still seeing the continued slide on the greenback. As we're talking about the slide in the greenback, what that obviously means on the commodity front is we're starting to see an uptake or an increase in prices slowly. We're looking at selling on the rallies on crude, especially with fears on supply issues. as well as stockpiles. We saw over the back of yesterday, we saw WTI on our charts right now come down and hit, or break I should say, the 46.50 level before rebounding just under $1 up over the course of the last day and a half, resting at 47.26, but most certainly appreciating value. And the same is going to be said of gold. Gold's looking fairly strong again. Right now, just resting below that 1295 key level. Right now floating at 1293.30 again, picking up the pace despite picking up the pace and appreciating value, obviously off the slide of the greenback. That being said, this has been the case, despite the fact we have seen a move from investors from the typical safe havens, such as gold, and moving away to many of the slightly what we would call slightly riskier asset classes, such as stocks. But that being said, we have seen a decline in the stock markets from the Asian Open, so potentially could see a slightly flatter session on the markets, especially on the stock markets today. But whatever your trades are, I wish you the best of luck in terms of trading. As always, if you've got any questions in regards to the charts, feel free to get in touch with us and we'll be happy to assist. Until next time, traders, happy trading. Bye-bye.